Bitcoin price has a lot of options in front of it, but Ethereum might help solidify what's getting ready to happen in regard to when do you have a good guess on what's going to happen in this volatility. For example, on our Bitcoin portion, because the origin line was hit perfectly with a strong buyback, Bitcoin might not continue going down for an entire month. And this rally back up off the new lows of the year, 16,900, it could go all the way back up to 20,500, right? What looks very unlikely is a strong and aggressive continuation down quickly over the next 3 or 4 days from the initial drop to 16.9 or whatever price point hit, right? So therefore, I can't get a good feel on, in the micro and short-term timeframes, which option Bitcoin's going to take. And my thresholds are a little farther away. So I have more space, more gray zone where I just don't have a good guess, right? Before one becomes more clear than the, makes a lot of sense, becomes clearer than the other. But on Ethereum, your zones are smaller. So the trigger zones on Ethereum, often they sometimes do lead Bitcoin price because it's the same algos trading Ethereum too. And if you get a strong trigger on Ethereum, it often boils over into Bitcoin if it was going to go that way anyway. Does that make sense? That's my basis for Ethereum, so let's go dive into this. Yeah, I should have looked at this chart earlier. So just like Bitcoin, you had a consolidation period, which resulted in an aggressive move down that hit an origin line and bounced pretty hard. So let's dive into this. Go to the 1 minute chart just to see the reaction. So this spent a couple more minutes below than Bitcoin. Bitcoin only closed 1 candle below. This closed 1, 2, 3 candles below. Not too much different, but on the 1 minute chart it is. So that strong buyback means specifically that it's highly improbable that the way price is going to behave over the next 3 days is more down and aggressive. I don't think that's going to happen because price would not have reacted like this on Bitcoin and Ethereum, right? So now the main options are you have price go up/sideways, recovers to some degree, and then break down later, likely over a month per the fractals on my Bitcoin video, right? Or main option number 2, because we can get rid of the option of immediate downside, right? Because it's the 4th most probable, we don't need to talk about it until it enters the 3rd most likely, which would happen, that moment will happen until the origin line's being hit again. That's when it'll come in the top 3 and I'll have to boot one out. So the other main option to visualize this, let's make this green because it's more bullish, I guess. Yeah, let's make it yellow. It's not that bullish. And then red is that. So even if it goes below, the way Bitcoin and Ethereum price have behaved in the past is when you consolidate or compression move, aggressive move down to an origin line and bounce aggressively on micro small time frames, right? You see, you have an initial reaction. In those cases, these are the 2 ways it behaves. And typically either way, I think one of the instances, it was only 8 days. So we're at least gonna have a week of sideways. So what that's likely going to involve, if it's to the upside, is you're going to have a triangle formed from the previous market cycle high, which you need on your chart. If you don't have that on your chart, even if you're trading the 1 minute time frames, doesn't matter. You need this on your chart right now. And here is an origin line, this blue line. So I could see price mostly filling out this triangle. Perhaps wicking below it, then coming back in, wicking above it, failure patterns above, coming back in. Maybe even having a quick test up to this point right here to 1485 before diving back into the triangle. Something to that effect, right? Boom. Wick up there, boom, come back in, and then go down. And then if it breaks to the downside, I would guess that it would hit this point. So if it does end up going below, and again, I don't think it'll be a death sentence. I think it will make a new lower low but then it would bounce back up to the origin line because of this initial reaction. Does that make sense? So if and when it does go back below this origin line, I would still guess it would bounce from 1158 and have a big rally up. Because that is what Bitcoin and Ethereum done every time you have this strong buyback. So these are my points. The two most important lines, I think right now, well, the origin line is number one. All right, origin line. To the upside, 1412, previous market cycle high, 1158 to the downside. And you're going to have a mean reversion, or you're going to have a reversion back to this line after hitting each of these. So if this is hit, don't get crazy bullish, because this line will be hit not too far in the future after that moment. If this line is hit, don't short it down to the depths of hell, because it's a strong likelihood that it'll rally back. I mean, that could be a 15, 18% rally. Oh, look at that. 17 3/4 from that point. That's a good guess. You could have a massive rally. And now it's even trickier because you're going to want to short into oblivion, and then other people are getting bullish to the heavens, and then it just comes back down, right? So it ruins both parties. That's like the party pooper, literally. Like you walk in and you see some house parties, on your street or whatever, and you go to two of them and you ruin both of them. That's what that would be. Double party pooper. So really, Ethereum is honestly, I think it might be better to just look at this simple triangle because it's a little tighter than the similar triangle we have on Bitcoin. Same situation, but I think the zone's a little tighter, and you might be able to front run some, and alts move more heavily off of Ethereum's moves, right? And if Ethereum's move will be triggered before Bitcoin's, and Ethereum triggers price movement either up or down on altcoins more than Bitcoin, use Ethereum. Ethereum might be the way to go, and make it as simple as this, right? Here. There you go.